Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about things in finance, accounting, tax, general business, operations, or maybe none of those things. But what's always true is we're talking from the perspective of accountants. And with me today is Charlie Zygmunt.
Hi, everybody.
Charlie and I have a few things to talk about today. We're going to be talking about EVE Online, the game that is about to integrate with Excel. Then I'm going to introduce you to a distillery accounting function series of articles that I'm writing. And my first one, what do operators want at the most basic base level? Then we're going to get into the topic of NFTs seem to be failing in terms of their sales value or how much of them are able to be sold. And it raises the question, are these things really needed? Finally, we're going to talk about why is Wednesday now the big work day? All right, well, we're going to kick this off with Charlie.
All right, so I've got an article we can talk about from Ars Technica called EVE Online Fans Literally Cheer Microsoft Excel Features at Annual Fan Fest. And so it's kind of interesting. What's going on is that apparently there's going to be a new JavaScript API. And for those who don't know, API is Application Programming Interface. It's basically how different systems in computing talk to each other. And so what's happening is they're building this new tool so that people can pull statistics from this game into Excel so that they can more easily analyze them. This is kind of like a role-playing game, but I think it's kind of, from what I've heard, I don't play it, but I've heard about it, it goes even beyond that. There's an entire economy built into it, and there's a lot of trading that occurs, and there's a lot of different kind of like teams and factions and whatnot, and so a lot of opportunity for analysis. And apparently they've, so much so that there's this official Microsoft partnership with CCP that is, going to seamlessly export data from EVE Online into the popular spreadsheet program so that players can help calculate everything from profit margins to battle strategy, is what the article says. Apparently what's interesting about it is they already had a thing where they would send reports that were like filled with graphs and all this stuff to anyone who played the game. And so this idea of like analysis in the game was already kind of part and parcel of it. I think that's going to kind of help it to go to that next level. And so what I want to talk about is, I guess what I'm thinking is, could we learn anything from an artificial economy if there was enough energy or effort put into that artificial economy such that we could make some kind of meaningful decision for the real world economy? Or is this all just, kind of big nerdy video game? What do you think, Ty?
Well, I think in terms of bridging what's happening in the artificial world to our world, I mean, these folks that are running these kinds of statistics to make decisions, that kind of data analysis, that's a workforce that we need in the real world. So, I mean, it'd be interesting. I think one interesting play on that would be having a way to identify the people who are particularly talented at doing that in the game and recruiting them into functions in the real world where those skills could be put to use. I can see something like that going on. Just like the classic The Last Starfighter, right? You play the video game to then get recruited into actually doing something in for real. I think that could be an awesome piece of it. I think the other thing about it is we've had discussions within our team at TCA and maybe even on this podcast about, is Excel, is Excel the right tool to be using for things? And, I think particularly in the accounting community and then the finance community, there's always this push, and there's software companies out there trying to solve this idea of getting away from Excel by taking some of the work that we do, the data analysis and the reporting and all of that, and move it from Excel into other types of platforms that maybe have better control or better automation or better something, right? I think that is the big mystery, is what really is better than Excel, right? And I think, and the fact that this video game is now deploying an integration with Excel, right? Like it's, highlights the extreme usefulness and flexibility of the program, and that it still reigns king in any analytical kind of application, including that in the virtual world.
No, I think that's very true. And not just that they've like released this, but they've got like a standing ovation, I guess, is what the article said. And so there's like a cult classic here of both Excel and of this game. And so I just, you love to see it. Do you have another article we can talk about though, Ty?
Yeah, I'm going to talk about my own article, actually. We'll post it or post a link to it or something in the comments for people. But I happen to be, my article here, I'm going to title it "The Level 1 Accounting Function for a Craft Distillery," but there's a broader purpose to me presenting this topic here. I'm putting together a series of articles with the intent that they can be looking at the management of the finance and accounting functions at craft distilleries, noting that, a craft distillery is in most cases a small business. And so a lot of what I'm talking about would be applicable to small businesses, particularly in production environments. But there'll be some things that I mentioned that are kind of specific to the craft distillery world. And as I get into this discussion, what I'm going to talk about here, and from the article that I have put together, is I'm really thinking right now, starting this topic in a very abstract kind of whiteboardish way. What I mean by that is that, if you ask the question, what should the accounting function do, or a lot of times it's we bring together what somebody wants from their accounting function or what a business operator wants from it with what we think is actually needed at that size with what a company at a particular size can actually afford. So we bring in all these constraints to that discussion, right? And so this, and even as I was writing this, I found it hard not to consider those constraints in writing kind of what I'm initially writing. But essentially what I thought is, well, let me try to set the constraints aside as much as I can and tackle kind of this idea of what do I commonly see that business operators at the most basic level want from their accounting function when, at what I call the level one wants. And that is that this idea that there's a minimum kind of function that business operators are going to want. Like even a business operator who's doesn't really care about reporting, they're not going to try to use their accounting to run their business. They aren't interested in financial performance or any kind of analysis or financial planning for their future of the business, or they're not interested in any of that. And it's hard for us to like have that conversation because that would be contrary to anything we would recommend. Like we're not saying you shouldn't be interested in any of that, but if we just accept the reality that there is an audience out there that is not interested in any of that, and that audience, those operators of small businesses and even craft distilleries, despite the fact that they're not interested in any of those great things that we say that accounting and finance, a good function, can do for the business, despite the fact that they're not interested in any of those good things, even those folks, that audience, has to admit that there's kind of a base layer of accounting that they have to have. And that's what I wanted to address in this article, is say, well, what is that base layer? What is that level one that even kind of your most kind of grumpy old operator who doesn't believe that there's much value in getting a lot of additional data and or knows how to operate the business with their gut? What is that base layer that they would have to admit, well, I have to have this function. This is a function I have to have, and therefore I want it. So I am commingling the need with the want, because I would say at this base layer, the only reason the operator wants any accounting is because of the need. And the need there that I see, what I see commonly in that audience, is that they accept that they need some level of accounting to handle, to basically track cash, cash coming in, cash going out. So they need some level of accounting. They want some level of accounting that at a bare minimum is tracking what's happening with the cash in the business. And beyond that, they want compliance. There's things that they can't control that require accounting, from payroll filings that require doing the processing of payroll and filing the related payroll tax returns and compliance items, to filing your income tax returns, having the data to file basic income tax returns. And then when you're talking about the distillery, the craft distillery industry, you have typically other types of regulatory filings. At the federal level, there's the Alcohol Trade Bureau, or what we commonly refer to as the TTB, which has required filings, including some excise taxes that are generally paid by distillery operations. So they may not, if they had their druthers, if it was simply up to them, an operator may not want to do the tracking for that, but they have to. They have no choice. So that creates the want for them. And then locally, you may have state regulatory filings. So I put together this list of things that I thought were kind of that base layer. I came up with 8 things that I thought were kind of the base layer that you would need for an accounting function. And I thought maybe I'd run those by you here, Charlie, and kind of get your input if you think I've captured it, or if you had questions about kind of the 8 things that I came up with here. So the 8 things that I came up with here is, first, you have to have a way to pay the bills. So we commonly, kind of in the accounting industry, we call that the bill pay function, but there's got to be a way to process payments to vendors and contractors. And that's not about tracking as much as it's about operationally, like literally, how do you get them the money that you owe them? So there's that piece of it. And then there's the tracking piece. So I would propose that kind of, again, even your most kind of ornery business operator, ornery in terms of not necessarily valuing accounting, would say that they kind of want to know where their cash was spent, who they paid. And so the tracking of cash paid to vendors and contractors, that's the second item. So processing payments, tracking those payments. And then on the sales side, invoicing customers, if that's what you do, if you actually invoice with terms on customers, and following up to make sure customers pay you, that operational piece, somebody's got to do that. And then tracking and receiving, tracking the fact that you actually received that cash from the customers and who paid you and what you got. I think that's something that everyone would say, yeah, at a minimum, that's one of those minimum things you have to have. So I'm up to 4. So number 5, I mentioned payroll earlier, but if you have employees, you have to pay them. You have to process the payroll. And in the US, that process is a process. You got to go, you got to not only pay them, but you got to follow federal and local laws and how you go about paying them, the timing of how you do that, as well as as I mentioned before, the compliance filings. Both federal and local are probably going to have some sort of payroll tax returns, as we call them, that have to be filed related to that. And then my 6th item is inventory tracking. Okay, I mean, if you're a craft distiller, then you are producing a product, right? And I abbreviated in my list here PG for those who aren't necessarily in this industry. What I mean by that is proof gallons. And so, you're going to have to track your inventory in the US. You're going to have to track the proof gallons of liquor that you've distilled or created. You're going to have to do that, and the units and the bottles or cases that you have, you're going to have to do all that kind of tracking by the unit, so to speak, for the federal TTB purposes. So that's a piece where if you weren't regulated, maybe you could just choose not to track your inventory. We wouldn't recommend it, but maybe you could. But in this case, you can't, because you're required to by the federal government for informational filings and for excise taxes that they charge distilleries. And then I would suggest that companies, probably if they're in the bare minimum zone like this, that they still track the cost of raw materials, and they accumulate those costs, and they only expense them or record them as an expense when they actually sell the item. So that's kind of what we would call inventory accounting, but it's not full-blown inventory accounting. It's restricting it. It's keeping it to the bare minimum of just raw material cost. And the reason I say that is because under old tax law, that was required. So even if you filed under a cash basis for your tax returns, which would imply that you don't have to actually accumulate costs in inventory. You could just expense them when you pay them. That's what cash basis would imply. But federal tax law didn't used to allow that. Federal tax law required that even if you otherwise claimed to be on a cash basis, you still had to maintain inventory related to your raw material costs. And so I recommend that companies still do that if they're doing this kind of bare bones, what I call level 1 accounting function, because a couple of years ago, the law changed, and it's technically possible, depending on how you interpret that law. Some interpretations of new tax law have been, you can just simply not track inventory at all. You can just expense it all when you pay for it. But I think it's too early to jump to that conclusion, because taxpayers are kind of making their interpretations. The IRS is evaluating it. So I think the safer thing to do, even if you're just doing a bare bones accounting, is to do it the way you would years ago and just stick with tracking at least the raw materials of inventory. And that option under the new tax law is still available. So it's not against the law to do that. You can do it that way. And for that reason, I'd say that's the way it's been done for a long time. It's well known how to do it. There's not a lot of questions on how to do that. So I think that's the best answer for most people, even if they want to kind of just do this bare bones version of accounting. And my final item on this list is you may have to track sales. Again, I would say it makes sense that you should track these things, but you may have external forces requiring you to track your sales by unit, by the channel. Like, did you sell, for example, if you're a distillery, did you sell your product wholesale, or did you sell it direct to consumer through a tasting room or through e-com or something like that? That kind of tracking may be necessary for local regulatory requirements. Here we are in the state of Oregon. Our Oregon Liquor Commission requires that when you're selling in a direct to consumer fashion here in Oregon, you have to track that information, report it to the Oregon Liquor Commission, and we pay fees. You have to pay fees in Oregon on that to the Oregon Liquor Commission. So not every state's like Oregon. So I'd say it depends on your state and how they operate, how much tracking you would have to do for state requirements. So those are kind of the 8 things. But and I just want to be clear before I turn over to Charlie to kind of weigh in on what he thinks about these 8 items. I want to be clear that I'm not advocating that the accounting function should be restricted to these 8 items. I'm just saying this is kind of the minimum list that if you just don't want, if you're a business operator who's looking at this, you're operating a distillery and you're like, if I had it my way, I wouldn't bother with any accounting. I wouldn't have any professionals doing any kind of accounting whatsoever. I think it's just a waste of time and money. If that's where you sit, I would disagree with you. But I would say these 8 things would be the minimum that you would have to do, I think. What do you think, Charlie?
I got to say, I mean, I agree with all of them. I think they're the right things to be kind of starting with on a kind of baseline for getting a business up and running. One that I'd like to add to the list that I guess I feel like I see people feel that they can, that they would call it that's something that they don't actually need. Right. But I would argue they actually do need it. And it'd be reconciling because, let's say you've got somebody out there paying the bills, right? So, they're paying the bills, but how do you know they don't pay a bill twice? How do you know that all the payments that have actually happened are actually somewhere recorded? And I think a lot of people look at this as like a test of the accounting that is not necessary because they can operate, they can pay people and just get through their day. But I think your opinion of that really depends on how many times you've been burned by a mistake that came from not having something properly recorded for the people. And that kind of leads me into my next point, which is, to me, as I'm listening to this list, the biggest distinguishing factor from the client's perspective of what is a need versus what is a want is how likely it is to have direct impact on their actual operations. Because when you do things like not paying your bills, well, then your vendors don't come back and they don't give you what you need, and then you can't operate. So suddenly that's a high level need because you can't operate without it. Not filing a return ends up with penalties that cause you to not be able to operate. So it becomes a need. I think double paying a bill because you forgot to record it in your accounting and didn't reconcile it can become a need as long as you've accidentally double paid a bill a couple of times and see it. And so, much like a lot of things in life, I feel like it ends up being that cumulative loss or issues that you've had are what kind of drives your perception of the needs versus wants for your business. And so, I find that, I know you mentioned cranky old ornery operators, but I find that sometimes those who have been operating the business for a long time are more willing to expand the list of wants, to basically expand the list of needs to include things that you would have previously called a want, because they've now been burned by skipping a step, and they recognize its importance as a result. But yeah, no, I think you've got the right list. I think there's more that goes on behind, as I know you've mentioned, but yeah, those are definitely the first benchmarks of trying to keep an operational craft distillery or any business really going, in my opinion.
Yeah, I love it. Reconciling definitely is something to consider on the list, right? And just to add to what you said, you brought out operationally that reconciling helps prevent you from operationally doing things like duplicating payments, right? Or asking your customer to pay you twice or something, right? But it's also, another piece of the reconciliation piece is that from a compliance standpoint, your tax preparer who does your income tax return is usually going to require that you have reconciled your bank statements and your credit card statements and things like that, because that's how they know they're not allowing you to double deduct expenses that you should have only been able to deduct once, or that they're not causing you to pay tax on income twice because you should have only recorded it once. So it's important, and it definitely becomes part of the list. That's a great addition. And yeah, thank you for those thoughts on that. And so, what I plan to do next on this, when we see it, I hope for our audience and get some more of your thoughts, Charlie, on it. And the next round is discuss kind of, this was kind of the level one base needs. And as I said, this is a list of things that I don't think are sufficient to really add value in the business. So I want to talk about, well, what do we actually think would be the things necessary to really add value in the business? What would be that next level of doing accounting that provides value to the business and how it provides value? So I'm looking forward to sharing that and getting your thoughts on it. But yeah, thank you.
Absolutely. Me too. I think that'll be fun because, yeah, I think there's a lot that can go on outside of that. And I'd love to kind of expand on that with you. So I've got another article we can talk about from videogamechronicle.com. And it's a weird kind of video game theme going, but this one is less about video games. What it's called is NFT sales have declined 92% since their peak. I know a lot of you know, but NFT is non-fungible token. It's basically this idea that we're going to have a pretty picture that we sell, and there's only so many of them in existence. And so people will buy them due to their rarity. And that's the idea. It's sort of been thwarted by technology, in my opinion, because there is no such thing as something completely unique once it's been shown as a picture that somebody could copy. But what the article says is, a lot of people are apparently coming around to that opinion because there's a website called Non-Fungible, and then the Wall Street Journal took that data that they put into a survey and they made it into an article. The article says that NFT sales fell from 225,000 in September, average daily sales of 225,000 of these tokens, to now down to 19,000. And so in recent, as of last week. And so it also said that the number of active NFT wallets fell significantly, down 88% from their high in November. Interest in them as well, because it can judge interest without just them buying or selling them. You can also use things like Google Trends to kind of determine whether people are searching for these things. And that looks like that peaked around January. The article gives some kind of interesting examples of specific things that have happened. There was like the first tweet from Jack Dorsey, the Twitter co-founder, got originally purchased for about $3 million and by a CEO of a Malaysian blockchain company. And then he tried to put it up on auction and he couldn't get above 14,000 for it, even though he had paid $3 million not that long ago, because everything in NFTs is not that long ago. And when the article kind of asked that guy for his thoughts on what's going on here, and he reportedly claimed that the failure of the auction wasn't a sign of that the NFT market was flatlining, but a normal fluctuation that could occur in any market. And so, I guess I want to get you guys' take on, was there ever actually a need for NFTs? I know a lot of people think there is, but I'm curious if you think there was, a true consumer need for this product.
Yeah, I struggle to see the need, I bet, but I'm not. Yeah, I wouldn't be an NFT investor. I think it's I guess at its core, if I understand conceptually the NFT, and you jump right in and tell me if I got this right or wrong, is that what it essentially does is it creates a way to turn more things into stores of value. It allows us to turn more things into collectibles and stores of value. I mean, if you think about that as like your classic stores of value are, rare minerals, gold, silver, land, these kinds of things that have been speculated on since time immemorial. And then, now you add to it cryptocurrencies is the newer version and, of a store of value kind of in that way as well. And then the NFTs, art. Well, let me go back. Our assistant and producer on the show, Ethan, was mentioning before this is that, it's kind of like, think about the comparison. He made this point of think about the comparison to art in the regular world, right? Is that, that's also true. Like if you go buy a real painting at an art gallery, a lot of times, sometimes it's people buying that piece of art because of their appreciation of that art. And sometimes it's people buying that art, not only because of their appreciation, but because they also see its rareness and its uniqueness as a store of value. And so I guess before I go further, I want to check my understanding of what NFTs are actually doing is in the same way that the art gallery facilitates turning a piece of physical material art into a store of value. NFTs turn pretty much anything else into potentially a store of value. Is that right?
I think that's the idea. And I think the key to it is that you have to understand that it's leveraging that same blockchain technology that Bitcoin is using to provide the ledger that helps everybody transact. And so it's like the idea is when you think about like a Civil War cannon, right? You may have a physical one and it may have a little tag on it that says who owns it. And you may buy either the cannon or a replica of the cannon, or you could buy a name in the ledger that shows who's owned this cannon. And because the pictures can be copy pasted, right? The actual cannon can be replicated as many times as it wants. So there is no like true ownership of that cannon if it's a digital image. But to get a spot in the ledger, which is where they're trying to say that the value is added, and when you buy an NFT, that's what you're really buying, at least as I understand it. And so I don't know if that analogy kind of helps, but I think the fact that it leverages the blockchain, which is just fancy talk for a digital general ledger, I think that's what they're selling is a spot on the ledger.
That does help because I think that expands my perspective beyond just a store of value, but also it's tapping into this human nature, this somewhat. It is a human need, but some people seem to have it more than others to be recognized for the things that they've owned, or, I've been here, I've owned this, and so, that's an interesting aspect. Like, does having, like you said, having your name in the ledger as one of the owners of this thing at one point in time, that's worth something to some people, regardless of the value stored in that, right? Like, I think about the example you were talking about where somebody bought, they buy the first tweet for 3 million and later sell it for 14,000 or 19,000, whatever that was. And they, and so it sucked as a store of value. It didn't actually serve that purpose, but the guy's name is in the ledger. So, maybe that maybe that $2,900,000 something $1,000 difference to be in the history of owning at one point you owned that first tweet, your name is in the ledger. Maybe that has a value to some people, and that goes beyond just the store value theory that I was throwing out there. So yeah, is that needed? Well, my answer to that is not for me, but I don't, I can foresee it is needed for some people.
Well, I mean, here's the thing. I think the key to the answer of is it needed is who's checking the ledger. Okay, so if it's something, when you look at credits on a movie,
Right.
and when you look at credits on a movie, right, people fight to have their name in the credits because they know that everybody who watches a movie is going to see their name in that movie. And so for them, being in that, we'll call it a ledger, right? But being in that piece of media is important because they know everybody's going to see it. Now, if everybody's looking up leaderboards on who's buying the Twitter, tweets, then I think it makes a lot of sense to want to be in that ledger. I think if instead of that, it's a digital place that's very superfluous and that no one checks and nobody even knows how to check, and you're just like got your name saved somewhere and really only you knows that you bought that, but like somewhere technically it's in there. It's kind of like those star registries you always see, like we're going to register the star in your
Yep.
friend's name, and it's like, okay, that star registry makes a ton of sense if everybody's checking that site, but if nobody has ever heard that you named it Bob the Star, then suddenly it's meaningless, So,
Right. That's
know.
right. Yeah. What kind of visibility is there to the fact that I own this thing? Yeah. Well, yeah. It's like owning the fancy, loud colored car, right? It's the neighborhood has to see it for me to get value out of it.
Exactly. And I guess as I'm just thinking creatively about this, but I guess like Mount Rushmore would be the ultimate opposite of this, right? There's a ledger of super famous people. It's literally carved into the face of a mountain, and people come to see it because you're part of history, and people can really just view your visage, and
Yeah.
only very select people are in that list. It's very
Yep.
small.
Yep.
But if you get there, it for you has a ton of value. You
Yep.
know?
Yep. I will say that while I'm not, while I'm not necessarily, I'm not a fan of investing in crypto or NFTs. The crypto CEOs proposition that this is like other markets in the sense that prices go up, prices go down. I do think there is validity to that, but in as much I would make the comparison in as much as is that we've got a lot of in the modern economy, we have a lot of what I'd call speculation markets. And so, yeah, like any other speculative market, things go up and go down, just like crypto itself. NFTs are going to go up and down, just like, even what I mentioned before, things like gold and silver go up and down too. And these are all, you can debate whether some speculations are good or some speculations are bad or some speculations are better informed than others, but I would park all of these things in the camp of they are speculations where if it isn't about who's watching the credits, if it is about like how's it storing value, that value is only based on the fact that you're banking on somebody after you placing a value and buying it for more than what you bought it for. It's not in and of itself income producing. So yeah, I would say yes, it is. That is true. That it is like other markets in terms of its speculative qualities of going up and down all the time.
Absolutely. And just the last thought, and then we'll put a cap on it. If you truly believe that the only value it has is its ability to raise in price, then you shouldn't be investing in it directly. You should be buying derivatives because you'd be able to leverage your theory more actively, which I'm not advocating to do, but I'm just saying if all it is this thing we can game and look at the timing of, well, then people who are really interested in that wouldn't buy it. They would buy the derivatives on it.
Right.
And I'm not saying to do that, but that's
I'm sure those exist, right?
they do.
Options and derivatives for NFTs.
Absolutely.
NFTs built on the blockchain, NFTs built on the blockchain, and then options and derivatives for those NFTs. Yeah. Wow.
If you're a speculator, then yeah, speculate, go crazy.
Right. Yeah. That's the professional way to do it.
Yeah. Just want to share that thought.
Yeah, that's great. All right. Well, I've got our last article here, and my article came out of the Wall Street Journal where they were talking about how Wednesday has become the hottest day of the week. And what they were talking about in that is that with people working more from home now, and you've got these hybrid arrangements, sometimes people work exclusively from home, sometimes they have to work exclusively from the office. But what we see a lot of employers doing is creating hybrid arrangements where they say, well, you can work from home, but maybe come in 1 or 2 days a week, or come in 2 or 3 days a week, or whatever that formula is for that particular employer. What this article was getting into is in those hybrid arrangements where people are working partly in the office and partly at home, and in the context of people having influence over which days they work in the office, we all seem to be centering around Wednesdays. That's the day everybody wants to work in the office. So it's become the hottest day of the week. And some of the things they cited about that is that, it's like, well, if you're going to work, that a lot of these plans of hybrid work arrangements are designed so that it's like a halvesies, like you work half in the office and half at home, which means some people are going to work like the first part of the week in the office and the last part of the week at home, or the opposite, and some people are going to carve out both sides of the week for working at home and just work in the middle in the office. And so the point in the article was, well, however you slice the week up, if it's kind of like a 2 to 3 day that you have to be in the office, the math works out, the probabilities just work out that the way you slice that's going to capture Wednesday, and that's made it the hottest day for everyone to be together in the office. And then you also have what I would term network effects here, right? Which we've seen that in our own practice, in our own business. We have office available for our team. They don't have to work here if they don't want to. We let people work from home or here as they want. And what's happened is our team chooses to work on the days they know everyone else is going to work, right? So when they know work in the office, I mean, people laugh at me because it sounds sometimes like I'm assuming that if somebody's not in the office, they're not working. But I mean, in the office, when they're working. What we find is our team chooses to work when they know everyone else is going to work in the office. And I think that's probably true in a lot of offices. You get that network effect where you start having this concentration, and then it snowballs because then everybody else wants to work on the day that they know all the other people are going to be there to socialize with, to meet with, to get things done with in person. And so Wednesday seems to be that hottest day. Does that sound right to you, Charlie? Would you assume Wednesday?
Yeah, I mean, I think, well, both of those points sound right. I think Wednesday is kind of the big one because, I don't know, I feel like you've got such a long break on either end because you got the weekend days kind of padding it. So you've got maximum time sort of away before you come back in. But yeah, as far as like why people would want to come in while others are there, I'm kind of that same way. I feel like we're very social creatures, and just having other people. And, one of the things is I think that working in an office, there's pros and cons to each approach, right? So if you work at home, it's convenient. You're able to get there quicker and whatnot and get the work done, maybe with less distraction, depending on the environment. But one thing that's definitely harder is collaboration. And so if you really believe that, then on the days when everyone else is in the office would be the days that you want to go in so that you can collaborate on things. And I don't know if that's true for everybody, but I feel like that's definitely one of the reasons that I've been, wanting to work on days where other people are in the office. But yeah, I think we're all kind of finding our new, way of approaching this. And so it seems like it's always in a state of flux, but I've personally experienced this Wednesday crunch. I don't know if you've felt that in your personal work week as well.
Yeah, I think, definitely for me, Wednesday's definitely my big day. I hadn't thought about it as being like that's when I decide to work in the office, because I'm always kind of in the office. I for our viewers, I garden at our office. So I have a garden and work at the same location. So I'm always here anyway. But when I think about my calendar, yeah, a lot of it does tend to like migrate to the middle of the week. Because it's like, well, things start off slow at the beginning of the week, and I never want to do anything by the end of the week. So any real, it all gets concentrated right there in the middle of the week for me, for sure.
Yeah, I do have that same feeling. Nobody wants to, like I've had today, just trying to get people to engage. It can be tricky on a Friday. And so, yeah, I think that's a universal thing of people not wanting to do anything on a Friday. All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Please tune in again next week for more business updates from an accountant's perspective, from 2 accountants' perspective this time, and sometimes 3 if you're really watching. And also check out our sister podcast, Profitless on Purpose, where they're discussing anything and everything in the nonprofit space. Thanks for joining us, everybody. Bye.
Bye.